Good afternoon, everyone. I am Saurabh from NASCOM. We will wait for 2 more minutes so that the attendees could join in. And after that, we will be proceeding with the session. Yeah. Please stay tuned. Thank you. Yes, thank you again. Thank you very much. Yeah, so now I would like to introduce our, speakers. We have Mr. Frederick John, who is going to moderate the session today. And Frederick John, fondly called as Fred, is the director and executive vice president of Personive, a BPO company based out of Coimbatore. He is also a member of NASCOM SME Council, giving strategic directions for various SME specific initiatives that NASCOM is driving for its SME members. In his 35 years of experience, Fred has won 16 awards nationally and internationally for his leadership roles. Fred is a Rotarian and spends much of his time doing community outreach projects. He is an avid motorcycle rider and a member of prestigious Harley Owners Group. So, and the other speaker and the guest speaker for this session is Mr. Avinash Sethi. And now I would like to request Fred to take the discussion forward and introduce Avinash to the audience. Over to you, Fred.
Thank you, Saurav. Good afternoon, everyone. NASCOM SME Council is pleased to launch its Centrestage series. This meticulously curated peer learning program aims to bring on stage founders or CEOs of very successful SMEs who will share their success recipes with the entire SME community. In today's inaugural session, we will witness Avinash Sethi. He will share fundamental lessons and elaborate on his fascinating journey in entrepreneurship. As a first-generation serial entrepreneur, Avinash Sethi has co-founded and grown 4 technology startups so far in the software vertical. It excites him to face the challenge of scaling up his ventures by constantly offering world-class products and services in a globally competitive market. He's currently leading the effort on inorganic growth, HR, and finance for InfoBeans Technology Limited, which he co-founded in the year 2000 with his classmates Siddharth and Mitesh. His specialties include ability to identify successful ideas and talents early on, implement innovative ideas commercially, understand clients' business needs, and be able to advise them at the strategic level. He loves adventure sports, having performed multiple bungee jumps, skydives, and river rafts. He recently got into endurance sport and has successfully ran 2 full and a dozen half marathons. He's also a certified yoga trainer. During his leisure time, he reads self-help books or goes out for nature photography. Today, the company he co-founded and CFO of, InfoBeans, helps companies use digital technologies to transform traditional and non-digital business processes and services into digital by creating future-ready software products. InfoBeans also helps organizations transform their business beyond standard functionality with implementation, configuration, and customization of Salesforce products. One of his friends and classmates, Sethi, who co-founded InfoBeans and is now CEO of InfoBeans, as he puts it, there are umpteen recollections of incidents that have been shaped, that have shaped the destiny of our company with his bravado and risks. And one such risk that you definitely took, Avinash, was to quit your job at Intel and leave the US for good. How did that pan out, and why Indore of all places?
Thank you, Fred, and thank you all the participants for coming here and hearing the story of InfoBeans. Really appreciate that. I would try and recollect my stories and the inflection points so that each one of you can benefit out of it. So answering your question, Fred, I think we are friends from school days, and we're in the same engineering college, and we're preparing for CAT during those years. And we used to have this mindset that is, we would do business some point in time. When we had no idea, but we thought we'll do something together. That was the basic thought that was boiling in our minds all the time. While we did our engineering, while we were preparing for CAT exams for MBA admissions. And then we didn't get through any of the MBA colleges, but we landed into Tata's in our 3 different Tata companies as our first job. And what so happened was we all landed in US within 1.5 years of our first job, and 3 different corners of the country. That is when we were trying to lay our hands on what to do. And while we were in our own respective jobs, I was in Intel working in Portland, Oregon, and Mitesh was with March 1st in New York, New Jersey area, and Siddharth was in Bank of America and Florida. So 3 corners of the country, and we were trying to see if we can still do something together. So what so happened was web technologies was very, very new, and I'm talking about 1999. 98 we landed in the US. 99 we started thinking of doing something together. And by March of 99, we launched a portal called as aapkaindore.com. And interestingly, we learned web technologies on our own, working late nights, working on weekends, and learned, HTML, style sheets, JavaScript, graphics. We knew how to create images and all of those things. So we created all of those, recollected, searched, scrapped internet to figure out which are the non-resident Indoris, we call them NRIs, living in overseas geographies, including US. We created a database of them. And with this portal, we could launch a working prototype of an e-commerce website with a payment gateway and with the ability to search friends which are in your region by zip code or by some college names, just like Facebook or LinkedIn that you search friends today. So we created this ability, and we also set up a back office in Indore, sitting in US, which was from Mitesh's house. We hired a person called Paridi Jain, and she's still with us after 22 years of journey. And so she used to go to shops, click pictures, scan those photographs, upload it on the website. And we created an e-commerce catalog, and we used to sell greeting cards, chocolates, bouquets, cakes, Indori sweets and namkeen, all of those on the website. And people used to purchase it from there, and the order was delivered. We also created a free postal service for people to it is a very interesting idea. They write an email to us, we take a print and courier it. So within 24 hours, the letter was delivered. Usually, if my participants would have lived in the US, and if you have to send USPS, it will never reach, one of the options. The other option is will probably reach in 3 to 4 weeks. And phone calls are very costly, about 50 cents a minute during that time. So we offered this free postal service, and it worked very well. It was a lead gen for our website. Shop orders were coming in, and the venture became profitable.
Okay.
So
Avinash, as all of us are aware, we were very new to internet or e-commerce in 2000. How did you manage to get business at that early stage?
that's very interesting. I think so. Coming to the Upkinder story, we thought, with this showcase or a prototype, we realized that we can work together as a team, because we are remotely working, in 3 different geographies and coordinating. So I took the plunge and I decided to come back to Indore. And by the way, the simple reason where I was the one was because I was a single. I was not married. And these two folks were married, so it was difficult for them to come out as quickly as I could. So I came back to Indore, started the InfoBeans from my garage, and Paridhi, moved into my setup, and we were doing InfoBeans and Upkinder from that setup. Interestingly, I think, each one of most of our technology entrepreneurs are engineers themselves, and they lay their hands on technology. They want to learn latest of the technologies available. And same was the case with us. I was working Power Builder and SQL Sybase database, but I switched myself into web technologies. And same with Siddharth and Mitesh. They were also in Visual Basic or Oracle, and then they shipped themselves into web technology because that was the latest and greatest at that point in time. And we used Aapka Indore to showcase it to our potential customers, our friends and families and relatives and business colleagues, and we started getting work. So that was the first step where we, started getting work. But before getting work, I left my job at Intel and chose to come to Indore, give myself a year, and see if it works. So because of that, that entrepreneurship kida, you say, that was bothering us, and we thought at least make an attempt.
Okay.
So to give you the timeline perspective, 96 we graduated, 98 we were in the US, 99 we launched Aapka Indore, and 2000 I started this venture with my friends Siddharth and Mitesh. Okay. So the first inflection was, leaving job at Intel and, coming out. But Aapka Indore was a hobby project, but it gave us a good showcase of technologies. Okay. And since it has payment gateways also, it allowed us to, get our first project.
Awesome. So if I may ask, was the programmer's talent pool available in Indore, or did you feel you made a wrong choice in starting from Indore at any point?
Yeah, I think, as you know, when you are a startup, you always want to look at reducing your cost. And what's a better way to start, from your garage, because you don't pay electricity bill to your dad, and it works out very easily. Yes, you are right. Talent was a challenge. So at that point in time, 2 new technologies came up: Java and Microsoft.NET. And I became Java certified programmer at that point in time, JCP, I guess. Yeah, and Siddharth came in next year, and we were struggling with the talent issue in Indore. So what we did was we started an educational business in parallel to InfoBeans services. And interestingly, it flew well. Mm-hmm. It was generating a good amount of revenue for us within a span of 2 years. And we were generating more cash in education business than in IT services business. And we were able to pick and choose right talent there. So, we learned the technology, during the night time. And the next day we used to teach to the students.
Awesome. Okay. So you were making money and it was a positive cash flow business for you with great margins and all of that. Why would you worry about expanding or growing at a faster pace?
So I think that's a very difficult question to, I mean, to ask yourself, as well as to seek an answer for that, because in Indore, within the first, I would say, 10 years, we were. It was a step-by-step, steady growth business, and Siddharth came in next year, and Nitesh came in a couple of years. So we all three were contributing to the business on a full-time basis, and the business was growing decently well. And industry and NASSCOM used to publish this annual growth rate, and it was in early teens, and we were doing better than that. So we thought we are doing very, very good, but we were not really very happy with what we were doing. And in fact, we started meeting people for advice. So by luck, we got in touch with K. Dinesh, who is a co-founder at Infosys. He happened to come to Mahu, which is a neighboring town to Indore, and we got a chance to spend a day with him. So we, picked his brain, tried to understand what we should be doing, how we should plan our future growth, and so on. So he gave a lot of inputs there. Then we attended this NASSCOM mentorship program in 2008, I believe. We used to fly to Delhi to learn from accomplished set of entrepreneurs, and they actually shook us pretty hard on the day one. In the first meeting itself, they kind of pushed us to the fore and saying that, what are you doing? You are a tiny little business, 100 people and probably 4 or 5 crores in revenue. Why are you so complacent? You should be, if you're growing at 20%, this is nothing. I mean, you think you are doing better than the industry. That's a stupid benchmarking that you're doing for yourself. You should be doubling yourself at the size you are. And why are you choosing Indore? By that time, we had an office in Pune as well. So I lived in Pune for a couple of years from 2004 to 5 and set up an office there as well. So they were saying Pune is the hub where a lot of action happening. There's a lot of talent available there. Why are you so stuck with Indore? Why are you not growing so rapidly? It seems that you are pretty complacent in the Indian Indore ecosystem and thinking that you are a king already. And therefore you're not putting a very aggressive effort to grow faster. I think that was a wake-up call for us. And I think for everybody here, I would certainly want to tell you that if you are a business which is less than 100 crores in top line, you should aim for doubling yourself every year and work towards it. You should not look at the industry matrices given by Infosys, TCS, or even NASSCOM, that the industry overall is growing at 10%. So if I'm growing at 20, I'm doing better anyway. Now that is fallacy. That is a misleading benchmark for yourself, because you are such a tiny business, you could easily double yourself. And that is the lever, that is the leverage we have to fast forward.
Okay. So for the benefit of the audience, you heard Avinash mention about NASSCOM's mentorship program and how he was part of it in 2008, which was a wake-up call for him and his company. Let me tell you that he himself now is a mentor with NASSCOM's mentorship program, Disha. So, congrats, Avinash, for the growth that you've shown in the past 10, 20 years.
Sure, I'll invite the participants to apply for Disha program. Yeah. We'll be launching a new cohort in the month of March. So you'll be getting mailers from NASSCOM team. Please apply for that.
Definitely. From your LinkedIn profile, I learned that you were associated with Sapiens Analytics in Pune between 2011 and 14. Why would you leave a company that you started and then go work for someone else?
Now that's a very interesting twist in the story. So I think when we started meeting people and asking them their opinion on the growth plans and growth strategies, like Avinash or the panel that I was talking about at NASCOM, and few more people that we interacted with, they all gave us a few pieces of advice, and one which is very important is think of your business beyond yourself. I think as entrepreneurs, we are so fascinated with our own creation that we think InfoBeans is Avinash and Avinash is InfoBeans. Now that is a mistake because what we have to think about is that InfoBeans is a separate entity in itself. It's like a child that you are rearing. You can't be overshadowing too much so the child's growth is affected. So there's a saying in Hindi कि बरगद के पेड़ के नीचे कोई दूसरा पेड़ पनप नहीं सकता. So the same thing is that you can't be creating an obstacle or you can't be becoming an obstacle in your own business. So the first thing that we started working out was that since we were three founders, we thought within the umbrella, we should have three businesses that each one of us should be running independently. So that was our growth strategy number one, that we thought we will do it. Now, in order to achieve that, you have to come out of your own business. Another problem that again, we've been advised, and that is my experience as well, is entrepreneurs are too busy in the operational side of the business. So they keep themselves totally involved in the operational side, which hinders their ability to think forward, to think in terms of investing their time and energy in the growth side. See, one thing that we have to look at as the founders are that we are the ones who took that step out of our comfort zone and started the business. So we are the only ones who can grow the business. Whoever you hire will only think of the operational side of it. They will not be able to think of the big picture. So it is our requirement. It will be injustice to our business if we focus only on the operational side. We should have an oversight on the operational, definitely, but we should have people to do that job for us. So in 2010, we started making an active effort in our company. Me and Mitesh decided to come out of it and let Siddharth run the show on the operational side and the entire. So he remains the CEO and he continues with it. So, and I, hired replacement in my own current roles that I was doing, groomed that individual so that I can be out of my business. Mitesh did the same. And we two started out two different ventures. So Mitesh started out a company called Save Time, which is similar to what Tracto is doing now. And he ventured that in Pune. So the parent company was investing in that business, but it was totally run by Mitesh. We invested in another product company called Sapiens Analytics. We became a single largest shareholder. And I went into that company as a chief marketing officer to grow that product business. So the strategy was that that allowed us to have three companies under the portfolio: InfoBeans, which is IT services company; SaveTime, which is a platform company; and Sapiens, which is a product company. So this was in late 2011 and early 2012. So at that time, we went into three different businesses, trying to see if we can grow in three different directions. Because each of the founders are capable to run a business independently. And since we were coming out of the operational trap, we were able to play this angle. By the way, we also had this, I would say, backup plan ready that if it doesn't work, InfoBeans, because it was done under this parent umbrella, InfoBeans was the beneficiary and the investor for Save Time. Same goes with Sapiens Analytics. Okay. So we always had this fallback option available to us. And we also wanted to leverage the power of three into three different directions.
Okay, awesome. So your point there specifically was not to be a hindrance to your own business, right? So now let's talk about dilution. Why dilute and be accountable or lose control? Why not take a bank loan to buy further company?
Cool. So continuing on that, story of three different ventures. By 2014, we got another VC into Sapiens Analytics. And we realized painfully that we cannot continue to hold majority in a company, particularly in a product business, because you need funding all the time. You have Series B, Series C, D, E, F, whatever. So every time a new investor comes, he will come with more money, come at a higher valuation, and therefore he would want to call the shots. So with that VC investment coming in and we losing the direction or the control to drive the company in a particular direction, I came back. I exited Sapiens on a day-to-day executive role and came back to InfoBeans. Mitesh, invested the 2 years in Sapiens trying to grow that. Save time, trying to grow that business, and we realized that we are not able to get funding there. So we can't continuously endlessly fund that platform business. So Mitesh also came out. We sold that business to some friend company and came back to InfoBeans. Now we were back to square one, but we realized that the learning was very important. That we are probably have a much higher temperament for services business than product or platform business. So now is the time to see how we can grow the services business much faster. So we grew very well organically from 2015 to 2017. And from 30 odd crores, we raised to 75 odd crores. And that is when we realized that, organically we can grow only so much. We need to seek outside help and grow faster. So we were trying to do inorganic acquisitions at that point in time also, but we were always, able to get only a very tiny portion of a company if we were to, because our own funds are limited. So, one option is obviously, if you want to acquire a company, you take a bank loan and, do that. But, again, it is a family business. So we are all Marwadis, we are all business people, from a DNA point of view. And it is told very clearly in our community that, you invest in equity with your own spare money. You don't take a loan to buy equity. And that is where we realize that if an acquisition fails, the bank loan that I'm going to take is going to become an enterprise risk. So we said, okay, let's go ahead and dilute ourselves. So we searched out for private equity. Then, we got through NSE platform and we realized that that is a good platform to come on. And that's where we chose NSE in 2017. And we got listed on the NSE Emerge platform. And we raised 37 crores at that point in time to fuel our organic and inorganic growth using that money. Okay. Yes, we diluted ourselves, but again, the philosophy is that do you want to own the entire cake, then the cake is very small, or you want to enlarge the cake and probably have 3/4 of the cake. Okay. So that was the philosophy there.
Okay. So Avinash, something that's intriguing me, 3 founders and that 2 classmates and friends. Don't you guys fight? How do you manage to stay together for so long? These days, even marriages don't last that long.
Yeah, we tease our respective spouses that we know each other more than your respective partner. So yes, I think we have our own share of fights and struggles and heated debates and arguments. Mm-hmm. But I think from day one, what naturally got in sync and an alignment was we are 3 people bringing 3 different capabilities on the table. Mm-hmm. So if I'm not good at one, the other person is good at one. So there was not really much of a need to question that person on that ability because no, I'm not really as capable of anyway. So we bring missing pieces in the equation, thankfully, and we realize it over a few years. Interestingly, in the first 10 years, we laid our hands on each of the business functions. So I would have done sales, marketing, delivery myself, HR, finance, all of those functions. So same with Siddharth, same with Mitesh. We all kind of round robin these functions initial 10 years. And then realize that, one person is actually very good at this or is passionate about that particular thing. So let this person handle it. Same goes with, Siddharth, same goes with Mitesh. So the way we have distributed our roles and responsibilities allows us to do what we love, and at the same time doesn't really there's a need to encroach on the other's territory.
Right.
Plus,
Yeah, that
I
was
think
going to be my next question. I know you share roles and responsibilities, but then aren't there territorial issues?
there are, and I think being three also helps because at times when there is a conflict, we do a simple voting, and 2:1 wins. But there is always a exception that is created, and again, this is all unspoken, set of rules of protocols. That a veto is also available. If I'm really, really upset on something and I don't want to do it for at any cost, I can always raise a veto that this is not going to happen. I keep my foot down. And these two gentlemen will accept and agree to that. So I think we have, over the years, we've evolved on a mechanism where we understand each other intuitively. And that has worked out fairly well. But at the same time, since we each one of us respect each other fairly well because of the capability that we bring to the table, I think it has worked so far so good. Touch wood, it is working out very well.
Awesome. So that was great insight into how to work with co-founders and then grow the company organically as well as inorganically. Now, let's get to have you share your learning from your 22-year-old journey, Avinash. And one of the things I would like for you to advise our audience on is to answer this question. Is it good to play aggressive or take it easy, or raise funds via PE or go IPO?
Yeah, I think it is going to be personal choice for sure. Mm-hmm. But the way we have evolved and learned in our own journey. So I delivered a keynote at the NSE when we did our IPO bell ceremony, opening bell ceremony. And I said, first 17 years, 0 to 2017, we grew organically without seeking help. And we were first-year entrepreneurs. We made mistakes. We learned, we evolved, and we kind of created a foundation. But the reason we chose to dilute ourselves, the reason we chose to bring on more people on the board or be accountable to an outside world is we want to take a different stance this time. So the second inning, and assuming it goes for the next 17 years, we want to play aggressively. Now we want to leverage the foundation of the first 17 years, the principles, the framework, the culture, the team, the foundation that we've created, the relationships with customers that we've created. We want to leverage it and play it better. So if I was a Dravid in the first 17 years, I want to probably be a Sehwag in the next 17 years. So that was so we call it the second inning. And we say that whatever we did in the first 17 years, we want to do it better by the learning that we have generated out of those experiences. And there's nothing to lose, right? As a services business, you're always going to be cash flow positive. The real struggle that you want to do is it exciting enough? No, otherwise it gets very boring, right? So first 22 years of journey doing the same thing, right? There are two fundamental challenges: demand and supply. When there's a lot of work coming in, there's talent shortage. When there's a lot of talent available, there's no work coming. That's the only two lever we are playing for last 22 years. It gets very, very boring.
Right.
So we said, why not make it exciting? Why not set ourselves with a target where we want to play aggressively? We want to do it sustainably. Again, I'm not saying that I would acquire any random company and just for the sake of growth, but I'm saying I'm going to, increase the time, the pie, the size of the pie by taking on businesses which I can sustainably digest and build on top of it.
Okay.
So we have done two acquisitions so far after our fundraise in 2017. And first was in 2019 with a US company into design and prototyping business. And the second company is a Pune company, which is a Salesforce Platinum consulting partner. So these two companies we acquired in 4 years' time. So we didn't rush because we had money to acquire companies. We took our time to choose the right business so that, it adds on to the entire portfolio and it is sustainable. I mean, it needs to add on into further growth of the business. So I think it is a personal choice that we need to make. Are we happy doing what we're doing right now, or we can play a little better? Come out of that comfort zone. I think one of the bigger challenges of entrepreneurs, particularly in the services businesses, the comfort zone that we are set into. So since we are three, we keep poking each other in terms of the growth momentum and the potential that we can achieve. Right. And believe me, we never thought we will be reaching at this size, and it gives me sleepless nights today also because we have a very aggressive targets moving forward. So it is up to you to make your business exciting.
Okay, that's great.
If you give yourself tough targets, you will certainly, strive towards it and you will try to probably achieve it.
I think you're hinting towards playing it aggressively for some part of it, I guess. And talking about investors, what are some of the challenges you face with investors? And I think that's going to be a quarter-on-quarter issue, I guess.
Yeah. So that's very interesting, So investors, and we had no experience to be accountable to answerable to the third party. We were accountable to each other, but thankfully to that, we had a lot of corporate governance systems in place. So we don't have to answer our customers on the governance side, at least, or investors on the governance side. But what we have to answer them is, they keep a close watch on things that you couldn't even imagine. So let's say one quarter you're growing well organically. And then they will come and say, okay, why are you not growing inorganically? Why are you not acquiring company? You're sitting on cash and this and that. 2 quarters later, when we come to an acquisition, they said, oh, good, you have done the acquisition. But, by the way, your organic growth is not visible. So they would, they would keep that strong checks and balance in the system. But nevertheless, it is exciting. And I think, even pre-IPO, when we did roadshows and we met with the investors, we told them that, we are in for a long run. Okay. And, if you are looking to make quick money, then probably we are not the right business. Okay. We will be slow and steady, but we will deliver growth. That is the reason we are in the market. And otherwise, we are a cash flow positive business. We don't need too much money to splurge anyway. So, why would we even dilute and make ourselves accountable? Yeah. So stay patient, so we kind of attracted, I think we have attracted patient capital, which would stay with you for 5 years or 10 years. And obviously, then there is no panic per se. And and I think we have delivered growth for them. So we issued our IPO at 58 rupees. We are hovering around, almost 10 times of that number in less than 5 years. So, and obviously those who stayed with the IPO times, they are the biggest beneficiaries. So, so that has been reflected in what we're doing and how it is showing up. So yeah, investors are a tough lot because their focus is only on numbers, and it leads a lot of explanation to them in terms of what kind of strategies we are following, whether it is yielding results or not, and so on and so on. But I think it is an important stakeholder in my mind, because if I were to go today and go to the market and go to my investors, uh, so I think of investors as a stakeholder in the company. There are four stakeholders in any company: customers, team members, vendors, and now shareholders. So they are also part and parcel of the same family. So if I were to raise, let's say, 200 crores today, I can go back to the community and ask for it again. And I'm confident that we will get that money.
Awesome.
So it is a very important element. It is kind of a bank account with no limit.
Yep.
Right. So you can seek it whenever you need it, and you will be able to get and then use that money further to grow the business.
Okay. So apart from tips to SMEs, I think you're also giving us stock option tips. I know where to go get my stocks next. One of the members in the audience, Saurabh Soni, wants to know, what should be the role of an entrepreneur in the initial stages of a software development company, especially in a single founder company? Now, you've been talking about, a group of 3 people. Now, Saurabh wants to know how it would be different in a single founder company.
Sure. I think, Saurabh, one thing that you have to think about is how do you build a team of very trusted people who are willing to work with you for long. So let me tell you, we gave stock options to our senior people in 2016. We didn't even thought of going public at that point in time. But we created a 5-year stock option plan to start rewarding our senior people and bring that kind of commitment to them that yes, if you help grow the business, you will also grow. The first one we issued for 34 partners. So we call them partners in the company. Employees are not called employees, they're called as team members. And these senior select people who we see a lot of potential, they are rewarded with a separate scheme, which is stock option scheme, and they're also involved in decision making. So these are called as partners. So we created that partner network, and today we have 134 partners in the company in the last 5 years. So if I don't count returners, we are probably 1,100 people. So it's almost 10% of the population which have got stock options. So you have to think of those people where you nurture them, groom them, and you'll have to probably enroll them into term lending programs as well. And bring them on maybe on a profit sharing mechanism or give them stock options in the company. So I think we need to learn from the product companies. How do they think of they don't have enough money to begin with, so they give stock options so that there's a skin in the game. And once they get funding from the outside world, obviously everybody benefits in that ecosystem. So I would say we should learn as an IT services company, pick and choose from these models, but you will have to, share the business with them. And then they will stay longer. And then they will obviously contribute more to the business. As a founder, single founder, obviously it is a little difficult, but you have to disconnect yourself from day-to-day operations. If you are not doing any work in the day, that's good, I would say. Because you have bought that time for yourself to think strategically, to think further how to you grow the business. And one thing that we do among the 3 founders is each one of us should have at least one function which is outward looking. So sales is an outward looking function, talent acquisition is an outward looking function, fundraising is an outward looking function, acquisition is an outward looking function. So each one of us would be at least doing one of these functions to grow the business beyond what is happening inside.
Okay. All right. There's been much talk about tech people and startups, but not that much about CFOs. Now, our colleague Kumar Rajgopalan, he wants to know how many hours does Avinash spend in a day at work, despite other activities like yoga, etc. And what is the latest book you're reading right now?
Wonderful. So I'm reading 2-3 books. One is Deep Work. And the other one I'm reading is What Got You There, What Got You Here Will Not Get You There. These are two books I'm reading. I don't spend a lot of time on finance or HR or talent acquisition. I usually have a lot of spare time in my day. I have senior folks who, obviously give me status updates and progress check and all of those things. So I would probably spend my time on the strategic direction. For example, let's say everybody is facing talent shortage. So I will share some ideas with them. I'll give them, things to achieve. Let's say in the next 3 months, for example, add people at the bottom of the pyramid. So you can add people by hiring from campus, by hiring from, let's say, smaller companies, by getting people from, let's say, core technologies, and then training them into things that you need. For example, Java programmers, you train them for ServiceNow. So we have this learning and development team which will be accountable for that. So I would give them those strategic tasks and ask them to execute upon it. But on a day-to-day basis, I would not have any operational work to be doing. So I have a lot of spare time at my hand.
Okay. All right. I hope that answers your question, Kumar. Atreya Ramkumar, he wants to know how you differentiate InfoBeans with others in an extremely competitive industry. Is it possible to compete with the giants in the industry?
We are. So I think one more piece that I missed probably in the story is, as a company from day one, we chose to work with enterprise customers only. We never went to freelancing websites for any work, even when we were 3 people, 5 people company. We never subcontracted with any of these big players or smaller players. So we always wanted to directly be in touch with the customer, with the stakeholder. It took time. I mean, but in the kitty today, we are a very small company even today. But we have 16 Fortune 500 customers, which are direct customers. We have at least 6 unicorns, which are direct customers. So, and there would be a connect of any of these founders, any of the 3 founders with each of these customers. So I think that was a strategy that we chose to play with from day one, that we will work with less number of customers, but we want to go land and expand deep and wide into these large companies so that we generate a lot of repeat business. And that is actually working in our favor. So that is one big differentiator if I were to compare a peer company. The second big differentiator is that we are very strong in building relationships. So my top 10 customers, which gives me, let's say, 70-80% customer revenue, their average age with InfoBeans is more than 8 years. So I'm able to build that relationship. Same goes with my team. I would have 300 people in the company which are with us for more than 5 years. And the senior leadership, which is probably 20 odd people, they've been with us for a dozen years. So I think the relationship ability to build the trust, which comes from competency, which comes from integrity, which comes from I would say ability to deliver, and then also accept if you fail. So I think we've been very, very transparent with everybody in the ecosystem. So I told you 4 stakeholders. We are transparent with each one of them. And if there's a shit that happens, we'll go and explain it. We'll try and clean it up. So I think we are smaller companies. The leverage that we can play on is the ability to act quickly and ability to have direct relationship with the stakeholders, founder to founder relationships, which TCS or Infosys will lack. So if a business owner wants to give a business, let's say he has $1 million business he wants to give, and if there's a senior manager from TCS, or there's a founder from InfoBeans, InfoBeans founder will always be able to convince and evoke that kind of confidence in the mind of the buyer. So that is what we should play as a small company.
Okay. All right. Another small business owner, Sundaresan Subramaniam. I think he's risk averse and he has this worry about capital outlay. And he only hires when he's got projects in hand and almost never hires mid-level managers due to the worry of high salary costs. Although he has very good client recommendations and pride himself for the quality of the work that his company does. So he would like to understand if you have come across such a situation in your business, and if at all, how did you manage it?
You have to take a risk, Sundar. There is no other way out. And the current environment that we are in, what you can probably choose to do is, build bench proactively. Spend time at a low cost people, groom them, invest money there, and then bring them up to speed. But in the market today, if let's say if you're a 100 people team, and if you have 100 more people, everybody will be consumed. Now you see, think of it. We are all riding a wave. If you when the tide subsides, everybody will be. We can know who is wearing who is naked and who is wearing what. So it is a time to capitalize and leverage and generate more revenue. Get as much client as you can, as many client as you can, because once it goes away, it will be very difficult to bring those customers back. So you have to take your chances. You can do calculated risk. I'm not saying you go blindly into it, but you should not worry about margins in the next 18 months or 24 months. You should rather worry about capturing business in this next 2 years period. Because I will tell you, there are companies which are working and knocking on our door without any sales effort. It doesn't happen every day. It is that golden opportunity that we are getting, because these clients are not getting people anywhere else, and therefore they're knocking every door that they get. So if we should capitalize on this opportunity, so there is IT services business. It is very, very difficult to risk yourself. You will always have cash flow positive business. It's just that you are in reinvesting or investing early on. You can do calculative analysis as to which technologies or which clients would need certain set of people 1 month, 2 months, 3 months down the line, and build that capability right away. You will thank yourself.
So you are recommending a balance between having the right employees ready when you have the right customers coming in, right?
I'm saying get as many people as you can today, or build if you want to build, but your customers are there today, they will not be there tomorrow.
Okay.
Feed them as much as you can.
All right. Thank you very much. And Geeta Goti is asking if work from home is in any way affecting your employee engagement initiative.
Big time. It is a huge problem. I mean, we have a world-class office infrastructure. The picture that you see on the background is one of the lobby that we have. And it pains me to see it is totally empty every day. We have an 800-seater office in Indore. Hardly 80 seats are filled. I think bigger problem is that since there is no one-on-one human connect, you can't establish relationship. You can't talk beyond work on a Zoom call. If you're scheduling a call, it is bound to be formal. But think of those, chai pe charcha, talk during the cafe or a smoke break or a walking down the aisle and just casually talking and patting on each other's back. That's very powerful human connection, and it is missing. And in the light of this attrition and hiring, half of our team is new.
Yeah.
They've not seen the office. They've not met us as an individual. There's no human connect. So we are. I'm very painfully wanting to get this away as soon as possible.
Right.
Work from home is very limited operation, and it doesn't help.
Right. And if I might add, all the new people that are joining you today do not know anything about your company's culture because they haven't experienced it yet.
Yeah, they don't know. I mean, they don't know at all. Nothing.
Right. Okay. So somebody anonymous wants to know if your go-to-market strategy has changed now that you're trying to go from a 200 crore revenue to a 1,000 crore revenue company.
That's a good point. And I think I keep mentioning to my investors every quarter as well. We created a simple growth strategy slide when we filed for IPO. And that slide remains for all these 5 years. And I'm assuming it will remain for the next 5 years as well. It's a very simple strategy. What it says is that there are two engines that we are running with InfoBeans right now. One engine is the organic growth, and the second engine is inorganic growth. And since this strategy has been working for us for the last 5 years, we want to at least run it for next 5 years, and hopefully by then we'll be a 1,000 crore company for sure. So essentially, what that strategy talks about is that we are two founders. We are three founders. Two of them are focused on the organic side of the business. I am focused on the inorganic side of the business. So we're not running one engine at the cost of the other. Both are simultaneously working. And since we have the leverage in place, means we have the framework in place, like the team, the geographical presence, the sales team, the sales engine, the delivery team, the senior management, so organic side is well covered. We have funds in the bank. We have investor community to support us for the next round. We have advisors to play in place to acquire companies. So we can continue with that strategy as well. So it is going simultaneously, and that's what I was telling investors. Say if you're growing organically, your inorganic is not working, and when we grow inorganically, they say, oh, organic is not working. But then, in totality, in a longer picture, both of the engines are working. So one engine is giving me 20-25% growth, the other engine is giving me 20-25% growth. If both of them simultaneously, I'll get 50 that year, right? But it is working well. So I don't think we need to change anything which is working well so far.
Okay, great. So that brings us to the end of our session today. Let me just remind our audience that NASSCOM SME Council is trying to conduct the NASSCOM International SME Conclave, NISC 2022. And the dates for NISC are March 3 and 4. And the theme of the event is Reimagine Business. And our focus will be on growth, innovation, and talent of the SME companies. You can go register online at the NASSCOM website. Ladies and gentlemen, this has been NASSCOM SME Council's inaugural Center Stage series. We're going to be having more of such talks. We will curate such peer learning programs and bring on stage founders or CEOs of very successful SMEs who will share their success recipes with the entire SME community. In today's inaugural session, we witnessed Avinash Sethi share fundamental lessons and elaborate on his fascinating journey in entrepreneurship. Ladies and gentlemen, that's it from us. Thank you for joining us. Avinash Sethi, gentlemen. Thank you.
Thank you very much. Bye-bye.